Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Greg Baker of Alumni Ventures Group. Greg, thank you for joining us.
Thank you, Hall. I'm honored to be here.
Great. So what was your background before investing in early stage companies? What did you do before this?
Well, originally a mechanical engineer with an MBA, an engineer briefly, but got into corporate strategy, corporate development, a lot of M&A, little corporate venture capital, and then did a startup and worked on that, turned it into a nice company. And from that, went into venture capital.
Well, great. So what excites you right now? What gets you all jazzed up?
What doesn't excite me? Thinking back to when I was in college, as old as this might sound, but I had to program with punch cards in one of my classes. And now I've got how much computing power on my phone, the acceleration of development in healthcare and biotech, and just everything is just accelerating so much. I'm naturally a gadget kind of guy. And this, as we're recording this, CES is going on. It's always fun to watch what's happening there. And just the pace of development is just very exciting to me.
Well, that's great. Well, you see a lot of startups. So for those who are wanting to invest in startups, what's your advice before they write that first check?
Well, all depends on the stage of startups. And startup investing has grown from angel friends and family rounds, getting a company that first shot of money, to billion-dollar rounds now that are still private, considered startup companies. Biggest thing that I look at on the early stage companies is the team and their flexibility. Have they done it before? Are they aware enough that what they've developed is probably not the solution that's going to take them to success? Very few companies start off and say, I've developed this, and that is what they end up being. So the teams that are dead set that they've created the best thing ever, and the customer gives them some feedback that's negative, their reaction is the customer's wrong. It's probably not the best team to bet on, because they are going to have to change what they're doing in some way. Might not be drastic, but there will be changes along the way. As you get into later stage deals, you need to be more cognizant of how's the market reacting. Is there a large enough market opportunity to offset the risk that you're taking? Because end of all this, large number of the companies that are invested in the startup stage fail. They may be great companies, great teams. The timing's just wrong. So as you make those investments, you need to make sure that you're building a portfolio that is going to be able to withstand the inevitable failures.
So what's your advice for people that are running startups? You mentioned several already, but what else would you add?
Be aware of your customer. Often see a quote, and I really don't know who it's be attributed to, but if you're not embarrassed by your first product release, you probably released too late. Now, that obviously doesn't work in some of the medical fields, but certainly SaaS and consumer tech. Get your product out there and find out what the customers really are looking for. My startup, I had a pretty good idea that what we were offering was something that everybody would want. And the reality is it wasn't. Now, we found things that they did want, which only happened because we got out there and we were working with customers. If you stay stealth for too long and just listen to what your own team is saying, you're not going to bring a product to market that the market wants.
Great. Well, let's talk about the state of investing in startups. The market continues to grow with startups, but how do you see the industry evolving? What changes do you see out there with it?
Well, there's clearly more money, and the classic lines are blurring. You've got private equity and large funds coming into what used to be the pre-IPO rounds of historically had been just venture capital funds. But those rounds have extended because of the nature of regulations that we've placed on people, it's just not as attractive as it used to be to go public. Amazon went public and they had the opportunity that you invested that day, you've made over 1,000x. Companies don't go public that early anymore. So you get more capital coming in from places that just didn't do private investing before. And that's creating issues of valuation creep, most famously from WeWork. The valuation just got crazy and it didn't make sense. And then on the other end, you've got more and more avenues for capital to come into early stage markets. And you need to be careful that the valuations don't get crazy there. The other piece of advice for entrepreneurs is the valuation that you really care about is the one where you're exiting. Those interim valuations, it sounds good that your company's worth $100 million, but if your company really isn't worth $100 million, it's going to be really tough to raise your next round. So don't worry too much about how high or low that interim step is. Just make sure that you can get from where you are to where you need to be for your exit.
Great. Well, let's talk about your fund. What is your investment thesis for investing?
Well, I run two funds within an organization called Alumni Ventures Group. And we were created about 5 years ago as a vehicle to allow individuals to invest in top quartile venture capital deals. Historically, the top performing VCs have generally been isolated to institutions as their limited partners. And they also tend to get some of the better deals and have the better performance. So we set out to create funds that have the opportunity for those individuals to get in at a reasonable investment. And then we take a following position alongside those top quartile venture capital funds. So we're doing follow-on investing, which can be tricky at times. You want to make sure that companies you're investing in, if they want your money, sometimes you shouldn't join a club that wants you. You want to make sure you're getting into the best of the best deals, which when you're not leading and negotiating those terms, it's sometimes a little tougher to make sure that you are in those. But when we get past all of that, we're looking to build a diverse portfolio across stage, sector, and geography. The funds that I run, Bascom Ventures and Towerview Ventures, are specifically my investor pool for Bascom Ventures are all alumni of the University of Wisconsin, which is where I got my engineering degree as an undergrad. And for Towerview, it's Duke alumni, which is where I got my MBA. And we have sibling funds at Stanford and Harvard and Northwestern, Columbia and USC, UCLA, 18 different schools, some of the top schools in the country. And that drives a situation where we have 50 full-time investment professionals looking for these deals and sharing opportunities across our organization. And then once we make the investment, we're passionate about providing value to our portfolio companies. We have a network of people who've told us they'd be willing to help out our portfolio companies that's grown to about 450,000 people. And we have a team within Alumni Ventures Group that all they do is work with our portfolio companies and set up meetings that effectively have the agenda of who do you want to meet. And we'll go through our network and find the right connection for them, reach out, confirm that they're willing to talk to the company, and make a warm introduction. And that is a fairly nice tool to have at the disposal of our entrepreneurs. I know when I was running my startup, I would have loved to have been able to reach out and find a solution to just about any problem I was facing. So end of the day, we're a big networking club that has some venture capital sitting on the front end of it.
Well, so what are the challenges you see startups face today in launching and growing their business? Is it regulatory? Is it the market? Is it technical? Where are they spending their time?
They spend a lot of time on regulation, mostly because that's not what their expertise is in. I see a lot of entrepreneurs spend an inordinate amount of time on the things that aren't crucial to their business, just because that's not what they're comfortable with. That's not what they know how to do. And If you're building a consumer products company and all of a sudden you're in the US and all of a sudden you start getting orders from Canada, what's the best way to service those? That's important to the business, but it's not central to what those entrepreneurs were doing. So they spend a lot of time trying to figure out import, export, taxation issues that take up way more time than they should based on what the business is doing. But most of the companies I'm working with, it's still technical. They're solving problems using technology, and the core of their business is, a lot of times it's just a group of engineers that are passionate about a certain problem.
Well, that's great. So you see a lot of different sectors and applications out there. Are there any particular ones you think are good immediate opportunities for investors to pursue? In other words, what's heating up these days?
There's a lot of effort and a lot of certainly needed effort in renewables and energy storage. A lot of opportunities, a lot of great companies doing some wonderful things. Biotech is always out there. We still have, as people's lives extend because we've reduced the critical nature of being diagnosed with cancer or HIV, our bodies will continue to grow to ages that they haven't seen in masses before, and we'll find new diseases that we'll have to deal with. So always going to be opportunities in the medical field, but those probably be the two biggest that I see exciting growth in.
Well, that's great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think that the great thing about early stage investing is that it doesn't correlate that closely with public markets. Most of the people I talk to are very concerned that we've been in a long growth in the public markets. It's getting historical, if not already historical in nature. And I've been around long enough that I know it's going to come down. The startup world is a little bit insulated from that in many ways. So this is an exciting time. There will be a downturn at some point. It might be next month. It might be 2 years from now. It might be 4 years from now, but be prepared for that. Make sure that you have a rainy day fund, but the opportunities, the great companies are going to make it through that downturn and flourish. So, the early stage stuff, I wouldn't be as concerned about the coming change in the public markets that is anticipated by many.
Well, that's good advice. So how best for listeners to get back in touch with you?
Well, I can be reached at greg@bascomventures.com, or go to our website, avgfunds.com with an S, or bascomventures.com, or towerviewventures.com. Interconnected, and try and make myself as easy to find as possible.
Great. We'll add those to the show notes. We want to thank you for joining us today and hope to have you back for a follow-up soon.
All right. Well, thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.